And in these trading the closes and game plans, I've said, okay, as long as you don't confirm above that, path of least resistance is down to this level here.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway shares expert crypto insights and discusses blockchain evolution, market dynamics, and innovative trends. In this video, we cover his outlook. Let's watch to explore these ideas.
NVIDIA continues to go lower today. I mean, it's 5% sell-off is a big sell-off, but overall, again, it's kind of been more orderly than something like a Tesla. But again, where are we looking at? You have a gap fill coming right here at 103, 102 area. That'll be my big level that I'm watching in tomorrow's price action. Amazon today, look at this, right down to this level. I did nibble a little bit on a swing trade on Amazon based on this factor right here. High pivot right here. There's a gap fill right there. And you can see, again, it did bounce off of its lows, closing around 194.66. Nice little bounce, by the way, into the end of the day on Amazon right there. A couple other stocks in motion that I'm paying very, very close attention to here, folks. So we looked at JPM. We did talk about Apple. Apple has been one of the stronger players, but I've been warning about the head and shoulders chart pattern. You can see, guys, this is where things get messy, right? So if you're looking at this head and shoulders pattern, earlier, prior to today, you would have said, okay, well, is it really forming the right shoulder? Well, today, it certainly looks like that shoulder is almost fully formed. And so we know head and shoulder patterns are bearish. And again, if the neckline breaks here, that's the break point. And again, then you start seeing that next cascade down to basically the 200 even number level there on Apple. So again, no levels on Apple yet. I want to be clear on that. I like levels on Tesla for a bounce. I like levels on other stocks out there I've showed you for a bounce. Apple is not there for me yet. The pattern formation is still too bearish, and it hasn't even triggered. I would be looking for that area below 200 before I nibble on a potential swing trade. Yes, the levels have guided you. If you've just simply shut off emotion, shut off what Michael Saylor says, shut off what the bears say, whoever it is, you could just follow the levels, right? We know our 92,000 level right here was resistance. We've never confirmed back above that since we broke below. And in these trading the closes and game plans, I've said, okay, as long as you don't confirm above that, path of least resistance is down to this level here, 73 to 75,000. So that's still the nature of the beast. We got down to about 77,000 today. We'll continue to monitor that. Couple other charts here. If we look at gold, gold actually did see some selling. And the kicker here is, like I explained earlier, it's not a big sell-off on gold, but this is just the nature of human psychology, is when you get in a situation where, this has run so much up. And
investors are fleeing risk assets as recession fears intensify. JPMorgan has raised its recession odds to 40% from 30% earlier this year, triggering a wave of market anxiety. Major indexes like the S&P 500, NASDAQ, and Dow have all seen steep declines this week. Tech and crypto stocks experienced significant sell-offs on March 10, with investors scrambling to minimize exposure as uncertainty mounts. Wall Street experts are adjusting their forecasts as well. Analysts at Goldman Sachs have increased the 12-month recession probability to 20%, and Morgan Stanley has cut growth predictions, expecting GDP to rise only in the coming years. Despite attempts by the White House to ease concerns, influential figures, including Trump's advisor Kevin Hassett, offer cautious optimism. Yet the prevailing sentiment remains uneasy, with market participants eyeing safer investments amid a turbulent economic outlook. With every indicator pointing to a possible downturn, many are bracing for market volatility.
10% in terms of a downside move in the S&P. The NASDAQ blew through that already and is down much, much more. Let's take a look at the big board and see what we have here. If we take a look, we can clearly see that the Dow, look at this, guys, down 1,130 points. That's a big move. You don't see that every day. In addition, the NASDAQ is down 4.62% or 840 points. The S&P down 3.5% or 200 points, just a massive dropping. And you could just see right over here, sea of red, right here. Technology is taking the brunt of this. To be fair, Tesla is one of the leaders along with Apple today, getting roasted by a huge amount for trillion or almost $1 trillion stocks. Now, oil today, down just a little bit. So again, fear over the economy, bringing oil back in. Gold is even seeing some selling. Again, a lot of people say to me, why is gold selling when it's usually a safe haven asset? The key is this. When gold has gone vertically, like it has, people, when the markets are in turmoil, they say, okay, where can I pull some money out of? Where can I take some profits? Oh, gold's done really well. Let me take a little bit out of that to protect and kind of plug up some other holes. And that's why, again, you're seeing gold selling. That won't continue for a long time, but for the most part, that is happening right now. And then we also see Bitcoin, 77,500. If you've been following along, we know as long as we didn't reconfirm above 92, we're likely headed to 73 to 75,000. We're very close at this point. Yes, I will start nibbling at Bitcoin once we get below 75. All right, here's your daily chart, guys. It is a sea of kind of the same sort of downward spiking action right there. Sea of red over the last couple weeks. And again, we knew that we had this beautiful up kind of wedge pattern-ish channel. And once that broke, the floodgates have opened. Now, there are some key technical lines in the sand that are into support. In fact, you can see we are bouncing decently off the lows of the day today, even though we're still down 2.7% on the S&P 500. All right, I'm going to go back to the big board, and we're going to take a look at some of these levels. Okay, so the first level for me on the SPY, right, we had this level right here. This was a level that we kissed on Friday, and today we are below it. I'm not convinced that we are going to break down. So I know there's a lot of fear out there. Until we confirm below this level on the S&P, I'm not buying that this is a full-out breakdown just yet. Now, listen, if we confirm tomorrow, okay, then we're going down lower, and this would be your next downside target down here. But right now, yeah, close below. It looks like it's going to happen. I'm not buying that we are going to confirm tomorrow. I'm going to make this market prove itself to me. And in that same vice, right, or in that same grain, you can see the NASDAQ has had a big bounce off the lows, but still down huge. But look at the NASDAQ. We broke below this level, but we actually did fill another gap right in here on the NASDAQ as well, and that one we are holding. So again, listen, this is a massive drop on the NASDAQ 100. If we look at this drop here, it is now down almost 13% in about basically 1 month or less. But again, I am looking for a bounce, and a lot of this is coming from key technology stocks. Case in point, Tesla. Look at this, down at 221 today, folks. But I did do some nibbling on a swing trade on Tesla. Now, why? Well, there's a lot of technical levels coming into play. We're into this level, and you also have the gap fill right down here. So there's a lot of support right in this level. This is where it was going into the elections, the big election run. We've now wiped out that election run and then some, but we are entering massive oversold territory. A lot of retail investors dumping today, which is usually the mark of a potential short-term low. And again, gap fill right here at around 213 to 214 could be seen tomorrow. But again, for me, it'll just be an add level for a bounce anticipated.
Bitcoin showed resilience on Tuesday, bouncing back above $80,000 after a nearly 3% drop the previous day. After hitting a low of $76,606 during the Asian trading session, Bitcoin managed a swift recovery during early European trading. This rebound comes ahead of critical U.S. macroeconomic data, with the Consumer Price Index, CPI, set for release on Wednesday and the Producer Price Index, PPI, scheduled for Thursday. These releases could stir more volatility in the market. Meanwhile, U.S. spot ETF data remains weak, recording a $278.40 million outflow on Monday, reflecting cautious sentiment among institutional investors. The recent price correction also triggered nearly $955.71 million in liquidations, with significant orders on Binance contributing to the sell-off. Market analysts note that, despite recent sell-offs, technical indicators hint at a potential short-term recovery. The Relative Strength Index, RSI, bounced upward from oversold conditions, suggesting that bearish momentum may be fading. However, if Bitcoin closes below $78,258, it risks extending the decline further. Broader economic factors such as ongoing trade tensions and inflationary pressures continue to weigh on investor sentiment. Yet, signs of optimism persist with developments like Spanish bank BBVA's approval to offer crypto trading and MicroStrategy's substantial capital raise. Other market participants remain cautious as institutional demand continues to show weakness. Look-on-chain data revealed significant Bitcoin movements from defunct exchanges, raising concerns about potential selling pressure. Despite these challenges, the recent rebound and rising RSI offer hope that this dip may be temporary. Traders will closely watch the upcoming CPI and PPI reports, as positive surprises could spur further buying and boost Bitcoin's price. This cautious yet optimistic outlook reflects the delicate balance between market volatility and investor confidence as economic data looms. Investors remain alert, watching every market movement closely. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.